Good day, everyone. Today we're going to be looking at episode 1 of a 6-part series, and specifically today discussing the high-low Fibonacci strategy that we use. The Fibonacci strategy, or the high-low strategy, is drawn on a yearly picture, a monthly picture, a weekly picture, and a daily picture. And what it does is it uses historical data to determine future levels of support and resistance. Okay, so 2018 levels provided a 2019 target. So break of these highs, the 100 or the fib, our target was the 127. A break of those highs now 127, and our next target is 161.8. Now I don't know if it'll reach that because we've only got a week or so to go, and then it's a new year and these fibs will move. But we've reached the 127 target. Exactly the same on Brent. It's used last year's levels to give us our support and resistance levels for this year. Strategy works well because, first of all, it gives us areas where the market is going to consolidate. There's our consolidation zone in Brent, and while it's consolidating, typically we don't want to be in trades. It's the break of the consolidations that we want to chase targets. For me here, target is still the 50 level there, 68.31 in time, but we'll see if that happens this year still. Pound US out of consolidation into the trend. Pound US again out of consolidation into the trend. It provides entry points to trade in the direction of the trend, and typically again that is a break out of consolidation. So short below the 38.2, target being the 11 there. Out of consolidation this morning on the JSE All Share Index on 5 minutes. Hit target, break of consolidation 0, just hit target at minus 161.8. Provides price targets even before the trade is taken. It provides stop loss levels, provides levels of support and resistance, works well in all markets in all time frames, and has a really cool hit rate. Okay, so where do we draw them from? It depends which time frame we're looking at. So I'm going to start with end of week candles, and we simply draw this Fibonacci level from last year's high to last year's low. So the highest price of 2008 to the lowest price of 2008 gave us our levels for 2009. So we can see the support and resistance levels, we can see the consolidation area, and then the break of the 100. We had a target which was reached last week at the 127. On Brent, in consolidation, out of consolidation, target being the 23. We've come back into consolidation, next level of resistance being the 50. Again drawn from last year's high to last year's low, gives us the levels for this year. End of day candles, we're going to draw last month's high to last month's low, and these levels are going to be valid for the whole of this month. So on the S&P, last month's high to last month's low, broke out of the resistance here, the 100 level. First target, 127, we've reached that, and we're just shy of the 161.8 target of 3228. Literally 2 points away at the moment. Okay, so these levels are valid for the whole of December. Come the end of December, we'll draw a new fib from the high of December to the low of December, and that will give us the levels for January 2020. Hourly candles, we're going to draw from last week's high to last week's lows. Those levels will be valid for the whole of this week. So last week's high to last week's low, so that's the 5 trading days. Above 100 was a trigger long. Target was 127. Above 127, chase the targets to 161 for the week. This will move now. It's Monday today, so that will then move to last week's high to last week's low. It was a public holiday, so it's only 4 days. And consolidation zone will then move between 61 and 38. And there we just broken the low of the consolidation. That's a trigger short. First target 23, it's just bounced off it. Next target is 11. Pound US, similar situation. Week's high to week's low. Out of consolidation, there was our trigger short 38 target 11. This will move now. It's Monday today. Last week's high to last week's low. Our consolidation area will move between 38 and 61. Trigger short for me will be an hourly close below 0. Take profit minus 161.8. Stop loss at 23. 5-minute candles is simply yesterday's high to yesterday's low, and the levels are valid for the day. So Friday's high to Friday's low gives us our levels for Monday. There's the break of the 38.2 with a target of 11, then again a break of the 0, target 161.8. We've just bounced off that level. Ideally, what we want to do is trade with a trend, and for the trend we simply use an 8/21 exponential moving average, 8 being in green in my case, 21 being in red. And ideally, while the green is below red, we want to be short, and when the green is above red, we want to be long. Our triggers to trade. Long above 61.8, target of 89, stop is 50. Short below 38.2 with a target of 11, stop is 50. Let's have a look at that. Below 38.2, target is the 11. Above 61.8, target is the 89, stop would be the 50. Again, for bigger consolidations, long above 100 with a target of 127 and 161, stop is 77. Short below 0 with targets of minus 127 and minus 161.8, stop is 23. So long above 100, 127, 161, stop initially would have been at the 77. Short below the 0, target 161 initially, stop was at 23. Didn't stop out there. It is an awesome strategy, so I really want to encourage you to register for the live webinar we're going to have. You can come sit here physically in Centurion and watch us trade live, or alternatively we can do it over webinar one evening. We'll send you the dates for that. So register for that live webinar, and I'll have more time to explain this strategy in more depth, and we can use various markets for examples as well. Over the next week, we'll be looking at the Forex matrix, and there we're going to be discussing how to identify the strongest and the weakest currency pair in all time frames. Just a little example of that. There you can see it where it gets a score, and in different time frames knowing which Forex pair to be long, which Forex pair to be short. But that's next week's work, and we look forward to seeing you there.